Okay guys, welcome back to episode 15. So I'm going to discuss the price action that we're looking for when we're around our high probability areas. Because I know a lot of people and a lot of obviously traders, from all the traders I've spoken to over the years, they look at, for example, tweezer bottoms, tweezer tops, dojis, etc, etc. For me, when I'm talking about price action, I'm talking about the actual characteristics of price. So we've got strong bullish candles, we see a candles getting smaller, indecision, then we have multiple obviously dojis, and then that leads to a shift in the market. That's what I mean by price action. So for example, I'll just pick out a few. So you need to know where to apply price action and where price action is valid. So if you look at this scenario here on euro dollar, for example, you can see we run into, so we've got our A, B, C, we run into 82.8. So you see this daily candle, a lot of manipulation in that candle. So let's zoom into the actual price. So you can see a lot of manipulation in that candle. Ideally, what you want to see around your reversal zone is wicks to the upside, is failure to close. Because our strategy is all about understanding where now markets want to shift. So you have to look at the price action on a whole. So when we see here, okay, we're starting to see slow down. So let's take this off and let's get more detailed. So you can see we've got our A. So I'm just gonna map them out so you guys just know what I'm talking about. So we've got our A here, we've got our B here, we've got our B leg here. What we're now looking for is our C leg reversal. So we've got our C reversal area, yeah? This is our area of interest. So what kind of price action do we want to see? Ideally, we do want to see a doji. Ideally, we do want to see some sort of slowdown, because what this candle indicates right now is that buyers are in full control of the market. That's what that candle indicates. So when I bring back the equilibrium, so that indicates on that day that was more like a 80-20. So 80% of the market was buying, which is why the candle went up. When you now look at the next candle, so I'll just put it under there. When you now look at the next day, we see, this is very important. When you see this price rallies up and fails, what that's showing you is now buyers are not sure whether or not they can take this market higher. So once that starts to creep in, you now can use that information. So when you see the low of that doji and the high of that doji, this now creates what I like to call the consolidation or accumulation range. So we can see that accumulative range is happening around our reversal area. So we're starting to get that around our 61 to 87. So this is showing me we now look like we're failing to move higher. When buyers were in full control of the market, let's take another look at that again. As I always say, the market always leaves the clues, guys. You just need to know what to look for. So when market made that high, notice price has now struggled for the next 1, 2, 3, 4, 5, 6 days, struggled to get above that area. So what is that showing you? That's letting you know price wants to move lower. We're going to move lower. And where are we going to move lower to? We now look again, like what we will say, same thing. We now look into the last time buyers had full control of the market again, because what happened? Sellers couldn't move the market lower. We ended up getting a doji, and then you see buyers step in. So that's all it is. It's an exchange from buyers to sellers. It's just an exchange. What do you see happen? We get the consolidation, we get the failure. That's our trigger point. For me, that's your trigger points now to start to look for short positions. You're starting to look for short positions. Let's have a look at this for our price action here. So we see 4-hour price action here. We can't get above this area. We're seeing more and more wicks. This is something that I'm gonna zoom into later on. But because we're potentially saying the probability of this being our reversal area is increasing, you now can use your fib because we're in that range. So understand we're zooming in on price and applying the same philosophy. So this is how I get the entries you see on Instagram, and how I get the entries you see on all the charts that I post, anything you see me with, when they wonder how I get the wicks. Because essentially you're now looking at a range. So right now we've got equal. Right now price is equal. So when you zoom into your 4-hour chart, you can obviously amend the lines a little bit more to suit you. But right now what we've got is a range. So now I'm looking at getting this as high as possible. I may be wrong, I may not be wrong. So when you can see we're starting to reject around this 74. So typically speaking, in a range, 50% is a good area, but again, you want a higher discount as possible. So for me, let's just be realistic and say I sold at 66, not always going to keep catching the obviously ideal perfect entry. So say I sold at 66, I'm now going to say my stop loss is 28 pips, because now I've zoomed in. I'm not looking at these targets, even though they're great intraday targets. My target is the overall target that we had when we was looking at this setup in the beginning, which is here. So we're looking at the target of here, put our fib down. So we're looking at a target of 1.09586. So let's take this fib off. So the target we're looking for is 1.09586. Oh, sorry, 1.09586. So we're looking at that is our target. So when we zoom back in again, all we've done is zoom into that reversal area and try and get entry point. You can get as precise as you want, which is why the lowest I go is the hour chart, because even on the hour chart, you're going to see the same things. You're going to see the same things. You're going to understand what's happening. All you're trying to do is catch all the failure. So you're zooming in for an entry. That's all it is. If you get in here, you can put your stop above here. It's just zooming in for an entry. But when you go back to your daily chart, then you understand how I get these entry points, because I've zoomed in to my fib area of reversal. I've zoomed in, I found a high probability area that we can get those entries from, and then I take the trade and I put my stop just above the 28. Again, this is based off risk and reward. Price may stop you out. Price may stop me out and then drop. But as long as you can keep taking risk and reward on 9s, on 10s, you only need 10 to 15% of these trades to go right for you to be profitable. Yes, putting my stop loss here is outside of the noise, but also decreases your risk and reward. But where I can zoom in, have a small stop loss, that gives me 9.4 to 1. Another example of this is gold. So I'm going to show you a few trades I took on gold, because a lot of people were asking me how I caught these trades. So with gold here, you may remember this trade on Instagram. So with gold, again, let's just look at how price is moving. We can just say here. So in that area here, gold's bullish. We've broken out and we've done what? We've retested. So let's have a look at our fib. Swing high down to our swing low. What did we get? We got 66 on the dot. So you guys already know that's my average. 66 here is my average where I like to enter the market. Let's zoom in on that price action. So I'm just going to highlight this area here, because things happened in that area that we can identify. So when we zoom into that area here, we're looking for how can we best enter this and keep our stop loss small. That's what I mean by price action. What's the kind of price action that I need to see that lets me know this trade setup is going to hold, and it's always the same. No matter what, it's always going to be the same. So when we're looking at this reversal area, by now you should be able to spot it. What do you see? This is the best time to enter, but my edge isn't present here. Obviously, you can potentially say there's a double top, whatever you want to say. My edge is present right here. We've got a high, we've got a low. That is my edge. So what do I do now? Even if I waited for this candle to close, we've seen a bullish candle, doji. So even if I wait for that candle to close, I'll enter here. Where's my stop loss? Stop loss is right here, 34 pips, because I'm saying to myself, hopefully this is the top of the market. Now let's take our zoom back out. Let's zoom right back out and have a look at where we are. Just get rid of this price action, so let's zoom in. So let's have a look at where we are. What's our target? So get our fib again, A, B, C. So our target is down here. So let's take this off. Our target is here. So when you see the trade, let's zoom back out again to our daily chart. That's how I get the entries that I get. It looks too good to be true, but it really isn't. At a point in the day, price isn't going to move higher. That's the highest price is going to go. That means no one in the world wants to get or wants to send prices higher. All you have to do is be aware of when that can potentially happen and the characteristics of price that you want to see. All I'm doing is looking for the exact same trade that we would take on any other time frame. We were looking for ABC, but it's just about, we're just getting very specific about the area that we want to see our ABCs forming. And then we're just zooming in, because that's a trade that you would take anyway, A, B, C, and we're looking to go down back into this region. Even if that was an hourly trade, you'd be looking for that reversal, failing to move higher, double top. We've broken, what did I say anyway? We've broken below the structure, which we shouldn't do. So now we're looking for that break, that return back up, and then we're looking for price to sell off. So even if it was an hour trade, it still has all the characteristics of the trade setups in which we take. So all you've done is just have an intraday approach to the price action, and you're just leaving on your swing targets. And that's something that people just don't understand. It's not really hard to do. You just have to have the confidence in your trade to do so. That's all it is. Again, that's our high. We zoom down to our low. What do we see again? Price rejecting around that 61 to 60, 61 to 70, 74. You can see 74. A lot of times you have a consolidation here. Probably the same thing is present as we move lower. So once you know where you want to be looking at price, what kind of price action you want to be seeing, it's all the same. It doesn't matter what time frame it is. All it is that I just zoom in to areas of interest. So I zoom into areas of interest and I look for the exact same setup that I'm looking for on a daily chart, on a weekly chart, on a 4-hour chart. But I just look for it on the 1-hour chart and try and get my entry in that time frame so I can have a small enough stop as possible. So that's just what I want you to understand about price action. Yes, learn the candlesticks patterns and dojis and bullish engulfing, bearish engulfing, because realistically the only ones I pay attention to are indecision candles in all their forms and variations, and our continuation candles and reversal candles. Those are the only candles you should be looking at anyway. And more often than not, the most basic patterns work the most anyway, due to market participants being aware of that pattern. You just have to be able to understand the various fluctuations that you might see happen. So I hope you enjoyed this video, and I hope you're enjoying all the content that I provided so far. And there's going to be much more, going into a lot more trading related detail as well now. Just things that I know a lot of you have struggled with or are still struggling with when it comes to managing trades, being the victims of manipulation. So all of that is still to come. So thanks for watching, guys.